After studying this module, you will be able to explain the meaning and the changing role of accounting, list users of accounting information and their information needs, define accounting theory and explain its need, discuss the nature of accounting theory, describe the foundation of accounting theory and discuss accounting in economic, social, legal and other environments. Accounting or accountancy is the measurement, processing and communicating of financial information about economic entities. Accounting, which has been called as the language of business, measures the results of an organization's economic activities and conveys this information to a variety of users including investors, creditors, management and regulators. Practitioners of accounting are known as accountants. The term accounting and financial reporting are often used synonymously. Accounting can be divided into several fields including financial accounting, management accounting, auditing and tax accounting. Financial accounting focuses on the reporting of an organization's financial information, including the preparation of financial statements to external users of the information such as investors, regulators, suppliers, and management accounting focuses on the measurement, analysis, and reporting of information for internal use by management. The recording of financial transactions so that summaries of the financials may be presented in financial reports, known as bookkeeping, of which double entry bookkeeping is most common system. Accounting is facilitated by accounting organizations such as standard setters, accounting firms and professional bodies. Financial statements are usually audited by accounting firms and are prepared in accordance with the generally accepted accounting principles known as the GAAP or in short called as the GAAP. GAAP is set by various standard setting organizations such as Financial Accounting Standards Board in the United States, the Financial Reporting Council in the United Kingdom. As of 2012, all major economies have plans to converge towards or adopt International Financial Reporting Standards, commonly known as IFRS. Accounting is often called the language of business because it communicates the information that owners, managers, and investors need to evaluate a company's financial performance. These people are all stakeholders in the business. They are interested in its activities because they are affected by them. In fact, the purpose of accounting is to help stakeholders make better business decisions by providing them with financial information. No organization can run its operations successfully or make investment decisions without accurate and timely financial information and its accountant who prepares this information. More importantly, accountants make sure that stakeholders understand the meaning of financial information and they work with both individuals and organizations to help them to use financial information to deal with business problems. Actually, collecting all the numbers in the easy part today, all you have to do is to start up your accounting software. The hard part is analyzing interpreting and communicating the information. Of course, every organization needs to present everything clearly while effectively interacting with people from every business discipline. In any case, we are now ready to define accounting as the process of measuring and summarizing business activities, interpreting financial information, and communicating the results to management and other decision makers. Accounting information allows business owners to assess the efficiency and effectiveness of their business operations. Prepared financial statements can be compared to industry standards or to a leading competitor to determine how the business is doing. Business owners may also use historical financial accounting statements to create trends for analyzing and forecasting future sales. The role of accounting has been changing with economic and social developments over the past few centuries. The traditional view of accounting as being concerned solely with the historical description of financial activities is no longer acceptable. Over a period of time, new dimensions have been added to the accounting discipline. The accountant selects raw data relevant to his purpose. The filtering process as an information system accounting data is provided by the conventions of accounting, which play a deterministic role in defining accounting information. This filtering process may be taken as one of the boundary between the accounting system and its environment, that point at which raw data becomes input data. The data selected forms the input into the processing system which provides accounting information. The information output is used by groups of decision makers which are identifiable, and it is evident that a decision oriented to information system should produce information which meets the needs of its users. Clearly, these should be specified in accordance with the theory of user requirements. This analysis of accounting as an information system enables us to make some important deductions. First, the goal of the system is to provide information which meets the needs of its users. If we can sufficiently and accurately identify these needs, we can then specify the nature and character of the output of the system. Second, the output requirements should determine the type of data selected as the input for processing into the information output. Third, welfare considerations may be taken into account in selection of the data. In this connection, the idea of control shows that users' needs should determine not only the nature of the data input but also the extent of data input, which should be determined by a cost-benefit analysis related to these needs and impact of their decision on the society. There are several groups of people who have vested interests in business organizations, such as managers, shareholders, employees, customers, and creditors. Additionally, the community at large has economic and social interest in the activities of business organizations. This interest is expressed at national level by the concern of government in various aspects of firms' activities, such as their economic well-being, their contribution to welfare, their part in the growth of national product, etc. At the local level, by the concern of local authorities and bodies in the direct socio-economic impact of the activities of local businesses. by identifying the basic goal of an accounting information system as being the provision of informations for decision making, we provide a framework by which to judge the effectiveness of that system. Accounting is moving away from its traditional procedural base, encompassing record keeping and as such related work as the preparation of budgets and final accounts towards a role which emphasizes its social importance. The Accounting Principles Board, commonly known as APB, in its statement number 4, accounting as a issued in the year 1970, regarded accounting as a service activity and defined accounting as accounting is a service activity. Its function is to provide quantitative information, primarily financial in nature, about economic entities that is intended to be useful in making economic decisions, in making reasoned choices among alternative courses of action. Accounting includes several branches, for example, financial accounting, managerial accounting, and governmental accounting. Accounting is now regarded as a service activity, a descriptive or analytical discipline, and an information system. It is all three. As a service activity, accounting provides interested parties with quantitative financial information that helps them to make decisions about the deployment and use of resource in business and non-business entities in the economy. As a descriptive analytical discipline, it defines the great mass of events and transactions that characterize economic activity and through measurement, classification and summarization reduces those data to relatively small, highly significant and interrelated items that, when properly assembled and reported, describe a financial condition and results of operation of a specific economic activity. As an information system, it collects and communicates economic information about a business enterprise or other entity to a wide variety of persons whose decisions and actions are related to the activity. Let us now discuss the nature of accounting theory. There is always a reason behind each and every action of human beings. Regarding finance or financial matters, a man is always extra cautious and thus he never makes any financial transaction without any reason. And accounting deals with financial transactions, so every accounting work is also based on reasoning. Accounting theories always try to explain with reason the logic and underline a particular practice. Generally accepted accounting principles cannot be changed completely as they are widely and universally accepted, but they can be reformed and modeled to suit the needs of any changed society or economy. Accounting theories point out to the scientific ways of thinking for the solution of any real world accounting problem. According to Hendrickson, accounting theory may be defined as logical reasoning in the form of a set of broad principles that, number 1, provide a general framework of reference by which accounting practice can be evaluated. Accounting theory may also be used to explain existing practices, the development of new practices, better understanding of them. But the most important goal of accounting theory should be to provide a coherent set of logical principles that form the general framework of reference for the evaluation and development of a sound accounting practice. To be absolutely able to solve any real-world accounting problem, an accountant should have sufficient practical experience aided by adequate theoretical knowledge. Generally accepted accounting principles, widely used customs, conventions, doctrines, procedures, and postulates constitute accounting theories. Thus, a logical and confirmed hypothesis accepted generally by all may be called as accounting theory, as all other theories are based on sound and solid reasoning. Accounting theories are similarly based on sound reasoning. Accounting theory and accounting practices are absolutely closely related. They are so close as it is very difficult to make them separate. Accounting theories have developed through observation, analysis, explanation, scrutiny and scanning of the day-to-day accounting practices. Again, on the other hand, the day-to-day accounting practices are performed by successful application of those established and generally accepted theories and principles. Due to changes in the economy, the society changes. Similarly, due changes in the socio-economic structure in any country, the pattern of accounting practices may also change. If there is any change in the accounting pattern, the pertinent theory also needs necessary modification and modulation. So then, theories also ought to be changed and modified from time to time. So, the relation between the two are compensatory and not competitive. There cannot be any practice without the proper theoretical knowledge. Again, theories emerge out of constant observation, analysis, examination of the theoretical problems and procedures. So, one cannot even exist without the order. Theories are considered to be pillars on which the whole structure of accounting stands. If the accountant is to perform this work of accounting successfully and skillfully, he will have to equip himself with complete and full theoretical knowledge. One cannot even think of practicing accounting without being properly equipped with theoretical knowledge. Not only that, theories also help the accountant in solving real-world accounting problems which may crop up during the practice of accounting. So, accounting theory and accounting practices are very closely related, so close as not to be separated. No one can deny nowadays the usefulness of having theoretical knowledge in practice of accounting. Needless to state that a man knowing theories is much better than a man who does not know those. Even if an ordinary man can be imparted with proper theoretical knowledge and practical training, it is sure that he will turn out to be a good accountant. So, during the present days, one cannot do any theoretical knowledge of accounting. It is essential now. Theory is defined as a set of interrelated concepts, definitions and propositions that present a systematic view of phenomena by specifying relations among variables with the purpose of explaining and predicting the phenomena. Simply stated, a theory is a systematic statement of the rules or principles which underlie or govern a set of phenomena. The importance of the theory of the development of any organized body of knowledge cannot be overemphasized. Essentially, theories are generalizations which serve to organize otherwise meaningless masses of data which thereby establish significant relationship in respect of such data. Gautier and Underdown in their book Accounting Theory and Practice have expressed their view that in terms of its ultimate objectives, accounting is a scientific way as any other discipline. In terms of its ability to develop and apply empirically verified theories, it is far from being a mature science. It is striving in this direction. However, they accept the fact that accounting is a social science. The usage of the term financial accounting coincided with the advent of joint stock companies. Accounting was geared to the requirements of the users of accounting information, both external and internal. Nevertheless, in the absence of a structural framework, accounting practice became the basis of developing theoretical structure by relating accounting practices to theory instead of depriving practical procedures from the theoretical framework. It is in this order of development that has given room for the statement that accounting is what accountants do. According to Kohler, science is a knowledge systematized by general principles and by method leading to its correction and expansion. As such, science is accumulated knowledge in any department of inquiry by application of scientific method. Knowledge is discovered and systematized by establishing causal relationship between two events, things or groups of phenomena, making generalization or hypothesis, testing the same for their accuracy and accepting them as principles. We shall be having a theoretical framework of systematized knowledge where there is a systematic grouping of interrelated principles. According to most, accounting theory is that branch of accounting which consists of systematic statement of principles and methodology as distinct from practice. The theory explains and makes predictions. The practice is tested and verified to know as to what extent it deviates from the theory. Reasons from the deviation are found and corrective action is taken. Either the theory is modified or restated, or the practice is adjusted according to the theory. Our next topic of discussion is foundation of accounting theory. The theoretical foundation of any accounting theory can be discussed from two angles, namely nature of accounting theory and roots of accounting theory. We have discussed the nature of accounting theory. Here we shall discuss the roots of accounting theory. Roots of accounting theory can be found in number 1, decision theory, number 2, measurement theory, and number 3, information theory. The essential purpose of accounting is providing information for decision making. Decisions are always addressed to the future. Information is required at every stage of the decision making process. The logical sequence of events in decision making has two facets are number 1, problem solving, number 2, predictions. Number 1, recognition of problem. Number 2, defining all the alternative solutions to the problem. Number 3, gathering all the information relevant to those alternative solutions. Number 4, addressing and ranking the merits of the alternative solutions. Number 5, deciding upon the best alternative solution. Measurement is the assignment of numerical values by means of to represent specific attributes of selected objects or theories. Rational decision making basically depends upon information on data. Measurement theory deals with the problem of assessing or evaluating data so that its significance is correctly stated or accurately represented. There are three problems of measurement. Number 1, what event or objects should be measured? Number 2, what standards or scales should be used, selected for measurement? 3, should reflect what should be the dimensions of the unit of measurement. The monetary unit of measurement scale in financial statements in current practice is normally unit of money. An ideal measurement scale would be one that is stable over time. Accounting is one type of information by the efficient use of its other resource, information theory, men, materials, machine and money. Many big organizations in developed countries are facing problems of information overload. The value of information lies in its end use, its intelligibility to persons making decisions and its relevance to those decisions. Information theory implies that the production of information should be determined by cost-benefit analysis, the elements of accounting environment. The economic, social, legal, political and other environment keep changing in country with time. Since accounting system operates in these environments, they have to be in tune with the changing environment. With the economic development of a country, accounting system assumes higher significance. There have been many stages of growth in accounting system. Consistent with the mass production techniques and high capital investments, there have been refinements in cost management accounting during the current century. In developed countries, refined planning, budgeting and control techniques is a development of 20th century. Accounting during the last 4 decades has moved towards social accounting. All these phases have largely a product of changing economic and social environment. Environmental pollution, product or service contributions to consumers and society, physical resources, social environment, human resources as well as community development have come within the domain of corporate social accounting and reporting. It is now well recognized that corporate activities have economic as well as social impacts on society. Accounting theory, methodology and practice are influenced strongly by requirement legal in the Companies and statutory environment or in legal and tax decrees and other regulatory measures such as MRTP Act and FEMA Act. This increases the usefulness of accounting information. Let us now summarize what we have learnt in this module. We find 3 characteristics of accounting. Accounting is number 1, measurement and communication of financial information. Number 2, about economic activities. And number 3, to interested persons. It can be said that primary role of accounting is to provide an economic and effective measurement and reporting system. We can also say it is an accounting information system for decision making. One important avenue for the development of accounting theory is through research. In reasoning from premises, which are assumptions, to conclusions, results are determined either deductively or inductively. Deductive reasoning is generally more normative and ideal Ideally, inductive reasoning is purely descriptive, although finding derived from inductive reasoning cannot be totally free or neutral. Deductive and inductive reasoning are, however, complementary to each other. Clearly, accounting policy making is normative since it is concerned with prescribing choices among accounting methods and requiring particular disclosures. Accounting system operates in economic, legal, political and other environments which keep changing as time passes. Hence, the system have to be in tune with the changing environments.